All right, let's get right into the data. Today, we're deconstructing the crypto universe. We're going to crack this thing open to figure out what actually drives value. Is it the tech? Is it pure scarcity? Or is it all about community and narrative? Let's find out.
So let's start with a number that puts the sheer scale of this market into perspective. Over $3 trillion. That's the total crypto market cap as we speak. This isn't some niche corner of the internet anymore. It's a global asset class, and we need to understand the forces moving it.
But here's the thing. There are over 19,000 different cryptocurrencies out there. 19,000. It's a massive, confusing landscape. So the key question is, what are they all for? To get to the bottom of that, we need a clear framework for how value is created and perceived in this space.
And you have to start with the original, the one that kicked this whole thing off, Bitcoin. You've heard it called digital gold, and for good reason. Its entire value proposition is built on an economic principle that's as old as time itself, scarcity.
It all boils down to this one simple, powerful idea. In a digital world where you can copy and paste anything infinitely, Bitcoin was the first to create something that is provably digitally scarce. Just like physical gold, you can't just print more of it.
And here is that scarcity written in code. 21 million. That's it. That's the absolute max supply of Bitcoin that will ever exist. Period. It's a hard-coded, unchangeable limit, which is the complete opposite of traditional fiat currencies that can be, and are, printed into oblivion.
Now, what's really fascinating is how this scarcity is enforced. It's built right into the system's DNA through an event called the halving. Roughly every 4 years, the amount of new Bitcoin being created gets cut in half. It's a programmatic supply shock. Imagine if, every 4 years, the world's gold mines suddenly started producing 50% less gold. That's the halving. So, let's put it all together. What is Bitcoin? It's a global, peer-to-peer value network that no single person, company, or government controls. It's secured by an incredibly robust consensus mechanism called proof of work. At the end of the day, it's a decentralized store of value.
Okay, so Bitcoin perfected digital scarcity. But what if you wanted to do more than just send and store value? What if you could build entire applications, businesses, even new financial systems on top of a blockchain? Well, that's exactly where Ethereum comes in. The world's computer.
This slide really cuts right to the heart of the matter. They are not competitors. They're fundamentally different innovations. If Bitcoin is a new kind of money, then Ethereum is a new kind of internet, a global, decentralized platform for applications.
The magic that makes all of this possible is the smart contract. Forget the fancy name. Think of it as a digital vending machine. It's just a piece of code that automatically executes an agreement when certain conditions are met. No middlemen, no intermediaries. This is the tech that powers everything from decentralized finance, or DeFi, to NFTs.
And the fuel for this entire world computer is its native asset, Ether, or ETH. It is absolutely essential. You need it to pay transaction fees, known as gas. You use it as collateral in DeFi. It's the currency of most NFT marketplaces. You can even stake it to help secure the network. So as network usage grows, so does the demand for ETH. But as Ethereum's popularity exploded, a couple of major problems emerged. The network got clogged, and transaction fees went through the roof. This created an opening for a new kind of player, one built for raw speed. Meet Solana, the high-speed challenger.
Solana's entire design is optimized for one thing: throughput. We're talking a theoretical capacity of over 50,000 transactions per second. It achieves this with a unique technology called proof of history, allowing for blazing fast transactions at a tiny fraction of the cost.
But, and you knew there was a but coming, that incredible speed has come at a serious cost: reliability. Solana has been plagued by recurring outages, times when the entire network has just gone dark for hours. For a platform aspiring to be the foundation of a new financial system, that is a massive risk.
This brings us to one of the most fundamental challenges in blockchain design, known as the blockchain trilemma. The idea is simple. You have 3 core properties: security, scalability, and decentralization. The trilemma says you can only truly optimize for 2 of them. Solana made a very clear choice to prioritize speed and scalability, which has led to trade-offs on the decentralization and, at times, security front. All right, we've gone deep on the tech, but that's not the only thing that creates value in crypto. Not by a long shot. Now we're going to pivot and look at a completely different kind of asset, one where value is driven by culture, community, and narrative. Let's talk about Bonk. Now, check out this distribution. This is key. When Bonk launched, they didn't do a big pre-sale to venture capitalists. Instead, they airdropped a staggering 50% of the total supply directly to the Solana community, developers, artists, and NFT collectors. It was a grassroots movement from day one. And this quote from the creators tells you everything you need to know about the why. Bonk was born from the ashes of the FTX collapse, which absolutely devastated the Solana ecosystem. This was the community's way of pushing back against the toxic venture capital-led projects and creating something for themselves. So what's the big takeaway here? Value isn't always about having the fastest transactions or the most complex smart contracts. Sometimes it's about a powerful story, a passionate community, and a distribution model that feels fair. Bonk is a perfect example of a cultural asset. Okay, so we've looked at digital gold, a world computer, a high-speed transaction layer, and a purely community-driven coin. Now let's pull all these threads together into a single framework so we can see how they stack up. This table lays it all out pretty clearly. Each of these assets is playing a completely different game. Bitcoin is playing the long-term store of value game. Ethereum is the utility platform, the foundation for dApps. Solana is betting it all on high-frequency throughput, and Bonk is a bet on culture and community. They have different goals, different tech, and totally different risk profiles. And this really leads us to the big question looking forward. What's going to be the most dominant driver of value in the next decade of digital assets? Will it be the most robust and secure technology? The most vibrant and engaged community? Or simply the most compelling narrative? That is the multi-trillion-dollar question.
Just a quick heads up, this analysis is for educational purposes only. The data in this market changes at lightning speed, so none of this is financial advice. You have to conduct your own due diligence and understand the risks.
We are tracking all of these flows in real time. If you want to see the tools we use, check out the links in the description below. And if you got value from this deep dive, make sure to like and subscribe for more analysis. Stay disciplined, stay liquid.